Hi, I'm Jeff Hoyt, Editor-in-Chief of SeniorLiving.Org. When you want a new credit card or you're looking to buy a house, it's important to make your payments on time to keep your credit score high. But many seniors worry about their credit score, even giving up necessities in order to pay old debts when they don't have to. Attorney Eric Olsen, Executive Director of the HELPS nonprofit law firm, wants low-income seniors to forget about their credit scores. As the founder of HELPS, a nonprofit law firm that helps seniors nationwide with financial problems, the former bankruptcy attorney will explain why seniors don't have to worry about credit scores, or debt collectors, or lawsuits, and how HELPS can help seniors who are struggling with debt, including getting them into a new rental with a low credit score. Because Eric is in Oregon and I'm in California, we'll be conducting the interview via Zoom. Hi, it's Jeff Hoyt, Editor-in-Chief of SeniorLiving.Org. Today, I have the pleasure once again of speaking with Eric Olsen. Eric's an attorney. He's the founder of the HELPS nonprofit law firm. It's a national law firm that helps people such as seniors, veterans, and disabled people who are struggling with debt. Welcome, Eric.
Good to be here, Jeff.
Great having you. There's a lot of talk about credit scores and keeping your scores up and how it can help you. And I know when I was looking to buy a house, my credit score was really important. But for seniors, do you think some seniors are too worried about their credit scores?
Well, they are. It's not quite the same when you're younger than when you're a senior. And so where, a good credit is great. There's nothing wrong with that. But where we can have a problem is if, a lot of seniors, if they're lower income, they may owe debt they can't afford to pay, okay? And if they don't pay the debt, it can have negative entries on your credit. But if they somehow sacrifice things to pay that debt, like if they go without their food, without their medicine, or they start spending down their retirement to keep paying bills that they don't have to pay just because they want to preserve their credit, it's not necessarily a good idea. It can be a bad idea and can backfire on the senior in the long run. The seniors need to understand one thing, most importantly, their income, Social Security, almost all pensions, disability, VA benefits, that's protected by federal law. It can't be taken from it. It can't be garnished, okay? And we're talking about consumer debt here, credit cards, bank loans, old car payments, things like that. It can't be taken from them. So they don't necessarily need to pay debt they can't afford to pay.
So someone like me, if I don't pay my Visa bill, they'll garnish my paycheck and then a certain amount of money will go directly to them to pay it back and my credit score will be ruined. But for a senior, you're saying even if their credit score is decimated because they're not paying their credit card bills, their money can't be taken from them under many circumstances. Their Social Security or other pensions can't be taken to pay their old debts, and that they're better off focused on paying for the necessities in life, food and housing, medicine.
Well, for a lot of them, that's all they can afford. I just talked to a lady with an income of $1,000, $20,000 in credit card debt. I mean, sometimes seniors just keep borrowing on their credit cards to keep up on the payment, and it just mounts up and up until at some point all the credit runs out, and then they just can't do it anymore. But there's a lot of reasons why seniors don't need credit like they were when they're younger. They're not buying a home, for one thing. Okay, a lot of seniors, if your income is lower, okay, you could have perfect credit, but no one's going to loan you any money. So, for example, for this one person, if your income is $1,200 a month and you're really focused about your credit, you could have perfect credit. But if you're paying $500 or $600 for rent and you only got $500 or $600 left, what lender is going to loan you any money? A legitimate lender. They're not going to. They can look at your income and say, oh my gosh, this person, they need every penny they can to survive. They don't have any extra money with which to make a loan payment. Now, there are always lenders that will loan money for really, really high interest and but they try to take advantage of people. And that's one reason their interest is high, is because a lot of these people won't be able to pay them back. But no, seniors don't need credit like they used to.
I like your example of a woman $20,000 in debt and making $1,000 a month. Any money she spends to pay interest on the old debt, she has to take away from her necessities. And you're saying that even if she keeps her perfect credit score, an 850 credit score, it's like having a holster without a gun. Without an income to back that up, she's not going to get a credit card. She's not going to get a loan if she goes to a legitimate lender.
Well, that's right. She may have an existing credit card that she has, and people can. I'll give you an example. If a senior has like 4 or 5 credit cards, okay, uh, and then maybe it adds up to $10,000-$15,000, and they simply can't afford to pay them, but they really would like to keep credit. I would tell seniors that if you want to keep one credit card with a smaller balance or when nothing is owed, you can do that. Okay, as long as that credit card isn't affiliated with a bank that you're not going to pay, there's no reason why you want to keep that credit card. Banks don't care if you don't pay your other debt as long as you're paying them. Now, you would want to make sure that you use the credit card occasionally, because a bank will cut off a credit card if you don't use it. You have to use it. But if you have 5 credit cards and you had one for $500 or $100 or $700, and that was with a bank that you didn't have another credit card with, yeah, you could still keep that credit, and that may be all you need.
And obviously, if you already have the credit card or line of credit lined up, then they're not checking your income, because it's only if you're applying for credit that your income is checked.
Normally, that's the case. Once in a while, we'll hear from seniors that they may have their credit limit lowered for whatever reason. They have a way to do some kind of checking, but no, if you don't pay your other credit cards, I don't see seniors having a credit card they're continuing to pay being cut off.
Now, what if they're sued? If one of the credit cards they stop paying sues them, won't how would that affect them?
So if you don't pay your credit card, there's going to be negative entries on your credit. And a couple years ago, the credit bureaus stopped reporting lawsuits on your credit report. Okay, and they also stopped reporting tax liens. Okay, and I'm pretty sure I know the reason why they did that. They were being sued. So imagine that you were making a mortgage and you're up on a deadline, and all of a sudden the credit report shows that you have a judgment lien against you. But hey, you paid that judgment lien off six months ago, but for whatever reason, it never got cleared off your credit report. So Experian, and I'm sure you guys were getting sued, so they made a decision. We're not going to report judgments and lawsuits, because if we do, and we could get sued because we didn't remove them from the record and we delayed this guy from getting a mortgage. So they'll report, credit reports now report late payments. Not all of them do. Like medical bills normally aren't reported on credit bureaus, late medical payments. Payday loans normally aren't. Timeshares normally aren't. It's normally the credit cards and bank loans. Now, if a medical bill is turned over to a collection agency, or if a collection agency gets a debt, then they will report negatively on a person's credit. But, we can talk about, why that isn't as negative for a senior as it was before. A lot of times seniors, they're not in the market to buy a house. Okay. Now, sometimes they'll ask me, well, what if I need to buy a car? Good question. Well, for a lot of seniors, they already own their car. Okay. Or some of that, and the car's going to last them. Or for a lot of seniors, they simply can't afford a car payment. For them to get credit to get a car payment could put them in utter poverty. So, we can talk sometime about, other transportation alternatives other than having a big car payment. And there's other options available. And sometimes I'll tell people this is Henry Ford country. It's really easy to get a car loan. You can get a car loan. I mean, it may be a higher interest rate, but whether that makes sense is a completely different matter. Now, the big reason why seniors worry about credit, I guess, that I hear a lot is, I need credit to be able to rent a place. And that's a good question.
So what can a senior do who's not paying off their debts and has ruined their credit if they do need to go and rent a place?
When you apply for a rental, they'll do a credit check, okay? And the reason they do that is, if you've got questionable credit, they're worried that you're not going to be able to pay your rent, okay? So when you're younger and you've got a job with a wage and you don't pay and you have a credit problem, you could be sued, you could be garnished, right? They could take money. And so if you're garnished, or if your bank account garnished, or your wages, then whoa, you're not going to be able to pay your rent. So, a landlord could be nervous about that. And, but it's different for seniors, okay? Seniors' income is protected. Social Security, pension, disability, VA benefits. There's even provisions for federal benefits to be protected in bank accounts. So automatically, so that their money can't be taken from seniors like it is for a younger person. But gosh, 48 or 49 out of 50 seniors don't understand all those rules, how it's protected. And the landlords certainly don't. So what Helps does, what the nonprofit law firm Helps will provide to any senior what we call a landlord letter. And it's kind of a form letter, and it's addressed to a prospective landlord. In essence, it says, hey, this person wants to rent from you. Their income is Social Security, pension, whatever, and their income is protected by federal law. It can't be taken from them. Even though they may have negative entries on their credit, this income will be available to pay their rent. Please take this into consideration in this person's application to rent from you. And we give that to seniors, and we give them another letter telling them, how to apply for rent. You got to clean up, talk nice, be courteous, all those kind of things, and hand them this letter. And so the person take the application, they're going to read it, and they're going to say, oh, I didn't realize that. Your income's protected. Yeah, Social Security, here's, oh, okay, well, that makes a difference. Okay, good. Yeah, you can pay the $50 application fee. And then the other reason we do that is if the person taking the application says, well, we have corporate rules no matter what. If your credit's bad, then the senior might know, hey, I don't want to apply for that place. But generally, landlords know that seniors are generally better tenants than younger people for a lot of different reasons. They pay their rent. And so we found this to be very helpful for seniors, and we'll give it to anyone that needs it, that is receiving, protected income like Social Security or pension, and that would like to use it to give to a landlord before they apply for rent. They don't have to be a member of our program. We'll give it to them, and to educate the prospective landlord that their income's protected.
And do you know of cases where this landlord letter helped people achieve housing?
All the time. A few weeks ago, I talked to a lady from Los Angeles, and that's a really tight market in LA, really tight. Her income was like $2,300, which is quite a bit for a lot of places in the country, but she could nowhere find a place to rent. And, and she had some credit issues, and she happened to call us, and I happened to talk to her. And she told me that, and we talked about this problem, and I talked about the landlord, and she said, well, I did talk to a nice lady that was actually thought she might consider renting to me, but I'm not so sure she will with these problems. And I said, well, let me send you this landlord letter. You give it to her, and you tell her to call me. And I don't normally ever do anything like that, but I did in this instance, just because, and I'm not saying I want to do it again. And I said, you tell her to call me, and sure enough, it was about 10 days later, I got a call from someone who said that they were calling about someone, and I'm not sure if this lady had even enrolled in HELPS. I think she did later. But I knew who that person was when they called. I remember the circumstance. And I talked to her on the phone, this landlord, and I told her, I said, yeah. So I don't know anything about this person. All I know is what she told me, and she sounded like she was being honest, and her income was Social Security, and that she'd been renting at a motel, and it was taking up like $2,000 of her $2,300 every month. And this place she was going to rent would be like $1,200 or something like that. It wouldn't be very much. It would still be a lot of money. But I said, I don't personally see any reason why she wouldn't be able to make that payment. Her income's protected. No one's going to be able to take it from her. And she said, well, could she refuse to pay me and I wouldn't be able to collect from her? I said, yeah, that's right. But you face that with any person you rent to. And we talked for a few minutes, and she said, well, yeah, okay. And she ended up renting to this lady. So yeah, we hear comments all the time from people that get the landlord letter that it works for them.
Great. And if somebody wanted to reach out to you, whether to get the landlord letter or some other help, how can they get help from the HELPS law firm?
Well, they just call HELPS toll free, and they may have we deal with other issues with people that have financial problems, but we'll give that landlord to anyone. They just need to call us on the phone.
Fantastic. Wrapping up, what are the big takeaways here? The senior's income is protected.
Here's the deal. A lot of seniors are almost kind of, you've lived your whole life having perfect credit. It almost kind of becomes an ego thing. It's so important to me. And one example is, let's say you have a job to do and you need a certain tool. Okay. A tool might cost money for you to buy or to keep or whatever. And that's kind of like credit. You don't need credit like you used to when you're elderly. You don't need it. And for you to sacrifice everything to keep your credit up can be a mistake. I mean, I've seen seniors dip into their 401k or their retirement monies to keep current on their credit card payments. Well, they dissipate this protected money, which is their future, to keep up on credit. And then when that money is gone, they still owe the debt, but their nest egg is gone. That just doesn't make any sense. So, and there's so many other options. I mean, you can keep what credit you have. Seniors just don't need it like they used to. But for a senior to sacrifice basic needs like food and medicine and housing and heat and all these things to keep their credit, they just really don't need to. It just doesn't make any sense. They're not going to be buying a home like they did before. And they don't have the money to pay it anyway.
Well, that seems like a good way to end. Thank you very much for enlightening us today, Eric. Really appreciate it.
Thanks, Jeff. You have a great day.